All right, hey folks, recorder's going. I know that I put out that Adobe signal without really talking about it. That's just because I just wanted it out there, just because of the slippery nature of this market. I want to be out there. Here's what we're looking at in Adobe. I'll bring in a daily chart here. Excuse me, ADVE. So on a day like today, we're seeing that the channel is obviously still moving up. Gap lower with everything else, but look at how it's finding this. It didn't quite get down there, but that support at the 50 days. So, this is one of those things that if you think that the market is just going to go lower, then this is probably not going to work, and it's probably not a signal that you should take. But that's often when it is, when it's kind of most harrowing that we are, that's the time to do it. We're also seeing a congestion entry here, almost coincident with the lows of today. So we're seeing support. I'm not a big believer in this sell-off. It's all on conjecture and politics, and those things will change on a dime. And I still believe in tech. I know Mr. Moon still believes in tech. Obviously Scott did too, because we put out the same signal in both rooms. So what we did is, so they have earnings. I know that we did the weeklies up to the 14th. We're not going to hold it for that long, and they're actually talking about they're talking about earnings being estimated for the 13th. Whatever it is, I mean, there's not a lot of vol to their earnings anyhow. But at any rate, doing the calculation here, we were trading at the time when I started looking at it, we were trading about 40 cents higher, but here down to 272.11, and then we go out to the 14th. And the 14th vol is 30.4 now. It's jumped up a little bit easily. Even if we just use the 59% confidence interval, we can target 295. We can almost target 300 if we go out to the full standard deviation, but also keeping in mind that we're probably not going to hold this until the 14th. Okay, so I'm perfectly fine targeting only the 292 halves. If we do get filled for $1.25, we have the 287 half, 292 half call spread. That's going to, obviously, at 287 and a half or less, we are going to, 292 half, not 272 half. See, that's a good example. Something looked obviously wrong, and it was. That's why we use the spreadsheet. Okay, we have to pay $1.25 for that. So at 287 half all the way down to 0, we are going to give back our $1.25. Our break even is going to be 288.75, which is because then we have a call that we're long that's $1.25 in the money, and we paid $1.25 to get in and watch this movie. So that's a break even, and then 292 half or higher. Well, now we make $5. We have to pay $1.25 again to watch the movie, so we net $3.75. That's 3-to-1 if we get the $1.25s. We're close. We're not filled yet, though. All right, so that was the thought process there. If any questions, like I said, this is a relatively quick video, 4 minutes or so. But if you want to review that, I wanted to get that out there because I know I was kind of quick. Okay, so if there are no questions, then I'm going to stop the recorder, and we will just move on.